And so if you want to slide over here,
Yeah, okay.
I have this. So
Okay.
um, hey guys, we're gonna wait a few minutes, let everyone, a bunch more people are gonna jump on. So we'll get started in a few minutes. Hey, everyone. We're going to get started here. So just first, if you guys want to put any questions you have in, I already put Paul's information in the chat box. So any questions you guys have, you can just throw in the chat box, while we're talking. If everyone just remain on mute, it's probably the easiest way to do this. And, we'll sort of go from there. So this is Paul Clow with Fresnel Partners. He's been my accountant for, I don't know, 5 years about now, and appreciate you coming in. And really the purpose of this class is just to get really intentional and purposeful about your finances. Unfortunately, as Paul knows, he represents hundreds of real estate agents in his career. Agents are pretty bad with their financials. So you have to, really get a hold of that. And we're going to talk. This is usually a 2-hour class that I teach, but we're just going to try to keep it to about an hour today. So Paul, if you just want to introduce yourself and, give a little bio.
Good morning, everybody. Pleasure to be here. I've got our companies over in Yardley, and we work with a lot of real estate agents, as Justin mentioned. We do tax, accounting, and we've helped a lot, probably more agents than anybody else, set up LLCs, because if you're at a certain commission level and business profit level, it's sort of a no-brainer way to save money. I guess it's also, Justin would probably agree with me on this, it's a way to help structure your business.
Yeah.
And provide some discipline around looking at how you do. And so what matters to us is that our clients are successful, and we enjoy working with real estate agents because we understand their business and feel like we can help beyond just preparing a tax return.
Yeah, and we'll get into a bunch of different topics today. I'm going to tell you my story right now. I'll be vulnerable and tell you the nightmare and all the mistakes I made. So when I was 24 years old, I got into the business, and my father unfortunately passed away at the beginning of that year. And I ended up that was in the height of new construction. So that was 04, 05. And I ended up making $150,000 as a 24-year-old. And I blew every dollar of it. I don't know if you guys ever see the scene from Dumb and Dumber when they find the money and they're in Aspen and they're throwing, money around when they get back to the hotel in their Lamborghini. So I wasted a lot of money, went through that entire year, blew all the money. I owed $35,000 at the end of that year, had to go to my mom to get a line of credit on the house. This is right after her husband passes. So of course I'm coming to her now, asking for a line of credit. So, I did that, and it took me 5 years to pay that off. Then 07 comes. And if I didn't learn my lesson from that, I got into trouble because the Great Recession hit. So, I'm sure you remember, and a lot of agents got in trouble. So again, I got behind on my taxes, did that whole thing again, had IRS, payments, had to do that whole thing. So it really wasn't until, 12, 13 that I really got serious and started figuring out, got an LLC. But, a lot of agents, and it's unfortunate, play the game, and Paul can chime in here, where they don't pay any taxes during the year, right? So they get to the end of the year and they have no taxes in. April comes the following year and they get an extension. We always joke, like, for realtors, tax day isn't April 15th, it's October 15th.
Yeah.
So why do so many agents, why do they get in trouble like I do? And you've helped out hundreds of agents, but like, they play that same game, right? They just, don't pay anything through. And then the next year, try to pay for the taxes before.
Why is a hard question to answer, but you're absolutely right. That's what people do. And I think when you have a W-2 job and they take away your 10 or 15% that you're going to pay in taxes, you never see the money. The problem with real estate is you get a commission check and you think it's all your money, but it's really not. A portion of it needs to go to taxes. And every now and then, maybe 1 out of 20 clients I know sets aside a certain portion of that every check, and then they're okay at the end of the year. But the vast majority, I think, you don't realize it. Then next year you're playing catch up. and then you're always playing catch up, and it's very difficult to break that trap, because to break that trap, it means in 1 year, you've got to pay 2 years worth of taxes,
Right.
and that is painful.
Yeah. So guys, what, you can take away from that is that, an agent gets a $10,000 check and they think it's all theirs. They go spend it, they get a new car, they do whatever. Really, you should split that up immediately as soon as it comes in, whether it's to your tax account, savings, and then really probably 3,500 of that or $4,000 goes towards your obviously bills and your living expenses. So yeah, that's a major problem, and we see it. And you don't want to get in that trap, and especially these agents, that are younger in their careers. You want to get this stuff established and a hold of it right away, and not go through all the pain that a lot of us have gone through of getting behind, because the stress of that. And look, this is a study. It's proven the number one fight between spouses or significant others is finances. And so if you don't have your finances together, you're creating a lot of fights even within your household.
Yep.
You're stressed about it already, and about what's happening in the business. And then you have to go home and you're fighting with your significant other over finances, of course.
Let me add one thing.
Yeah.
The other reason is you're allowed to deduct your business expenses.
Right.
And most people aren't good at tracking that.
Right.
And so that having to prepare for that is stressful for people. And so they avoid it.
Yeah.
And go sell another house instead of pulling together the information that they need that can actually save them a lot of money.
Yeah, and to that point, when I first met Paul, I was the dude who came in with like a shoebox of receipts. I mean, like it's 1980, and he's like, "You're killing me here." Number one, it's more work for them, right? So then your bill is higher because they have to go through it all, and it's just very disorganized. Like, how can you run a business? And the idea of this call, and what I try to talk to our agents and coach our agents through, is moving from a salesperson to a business owner. And that's the real problem in real estate, is that most agents hover in the salesperson side and don't change over and become a business owner. I mean, if a business owner, you talk about big companies, every single business owner, they know their numbers. So now I'm going to share with you guys in a little bit my profit and loss and sort of what that looks like, and what Paul has helped me set up. But you really have to know your numbers. And when I'm on my coaching calls every week, I share my profit and loss with my coach, and they easily can dissect to see where the strengths or weaknesses are, or what's happening in the business. Before we get into profit and loss stuff, I'd like to, so what's entry level, the LLC, let's talk about the LLC, and then the entry level, because some agents may not be there yet, but we want to set them up for success once they hit that. I think it's $50,000 in
Yep.
GCI, right?
Yeah.
So
An LLC and making what's called an S election for federal taxes can save you self-employment taxes. Doesn't really affect your income taxes, but what I think a lot of people don't realize is that self-employment taxes, Social Security and Medicare, and because, as Justin said, you're a business owner, whether you realize it or not, you pay both the employer side of it and the employee side of it. And that's 15.3%. So if you had 50,000 of gross commissions and 10,000 of expenses, your profit is 40,000, and you're going to pay $6,000 of self-employment tax. Well, forming an LLC splits that into a salary where you'll pay self-employment tax, and business profit where you don't pay the self-employment tax. So it could save you on the order of half of that money. So it could save you $3,000 a year.
right.
And that's a pretty significant savings for somebody. And so somebody that's at $20 or $30 or $40,000 of commissions, there's some costs associated with doing it, maybe not worth it. But if you're at that 50,000 or above, and on a consistent basis, it makes a lot of sense,
Right.
to look at.
And just from a personal level too, having that money, when you take that salary to yourself, you can use that salary to pay for your
Right.
personal expenses. And guys, this is from a lot of mentors and, coaches, business coaches. Ideally, you want to get to a point where your salary that you're taking out of your business covers all your personal expenses.
Right, and then the profit
Is
is
profit,
your savings and
retirement, vacations, buying investment properties. So that it's really, really important to dial in that. And, some people take chunks, like I take chunk, how I do it.
Yeah.
I take chunks of the big payrolls every quarter. Some people like it more consistently, every single month.
yeah, we tend to recommend monthly.
Monthly is the best way with anything. They always say, if you're doing a 529 for your kids or retirement, do it monthly. So it's not a big chunk and you're like, oh my God, it's so much money. And then what's the percentage of so let's say it's 100,000 in GCI, what's the government called it? You always say
Reasonable salary.
reasonable salary. That's what the government calls it.
So say your gross commissions are $100,000 and your you've got business expenses for marketing and
Right.
mileage and all those things. Say that's around 20 or 25,000, but let's use 20,000 and
Okay.
your profit is 80,000.
Yep.
A reasonable salary is probably 35 to 40% of that. So maybe like 32,000
Right.
or 36,000.
So after the expenses, whatever that number is, 35%.
Yeah.
Right. So that's a good way for everyone to sort of understand that. And then it just scales to whatever,
Yeah, if you make more money, obviously you need to take
Right.
more salary, but I recommend taking a consistent salary. And so if you have a great year, and some of our clients have done very well in the last couple of months,
Yeah.
they don't need to increase their salary because that's been their salary for 5 or 6 years. They just take a consistent salary and that's just greater profit, but they're not paying self-employment tax on that greater profit this year.
Right. Yeah, exactly. So again, going back to your salary, and then you can take distributions, and a distribution is really just moving from your business checking
Right.
to your personal. So any money that you take, whatever that number is, you save 15.3% on the self-employment.
Right.
So you got to think from scalability, big teams that are, pulling over 200, 300 grand, at $300,000, you're saving $45,000 in taxes.
Some of it tops out.
Right.
But you're saving a significant amount of money.
It's a really, really big amount of money, and it's just important. Again, it's setting you up for success. You're trying to run this like a business, and without having this set up and without knowing your numbers, you're just setting yourself up for failure.
It is a little bit different than what you're used to doing. And so when we set them up for people, we want to work with those clients over that first year to year and a half to get them used to managing things through a separate bank account, managing the salary level, setting the salary level at an appropriate level.
Yep.
When your commissions go up and down, and that's important. But a little bit of that planning makes a big difference in how much you take home at the end of the year.
Oh yeah. And just from and being in a place where, I was so stressed and had all this anxiety, and, you're thinking, I remember years in the past going through, and this was before you were my accountant, but my other guy, I was just like crossing my fingers, waiting for the number. I had no taxes saved, and you're like, oh my God, is it going to be 30? Is it going to be 50? Is it going to be 17? And you have no clue what that bomb that's going to be dropped in over your email. And it's a really bad place to sort of live and operate in. So again, this is like one of my greatest things that I champion here, within our office, especially, is really figuring this out, because I want people to learn from my mistakes and years of being stressed out and not knowing where you are financially. It's just it's a bad place, bad place to be. Questions real quick. Is 33% a good amount to set aside for each check when it comes to taxes?
Yeah, I think that's a good place to be.
Yeah,
Yep.
that's really good. And you get in the habit of that. So again, it's more of a mindset thing where every check is like, okay, no, this is not your money. It's the government's money. That's the way I looked at it. Even though you get it, it's like, okay, you got to pay your taxes,
The other thing is, if you're doing that,
Right.
And you don't have an LLC, you should be making quarterly payments, because you'll avoid some interest charges.
Right.
They're not a tremendous amount of money, but why
Yeah.
make those payments? Keep that money for yourself.
Right. Dave asked, is there an absolute minimum you must take as a salary?
So the rule is you need to take a reasonable salary. If you take nothing as a salary, I'd have a hard time arguing that that's a reasonable salary. If if you're a real estate agent and I don't know what your commission level is, but if it's $30,000, I could argue that it should be like $1,000 a month. If you're making $300,000, that $1,000 a month is hardly going to sound like a reasonable salary for somebody in your position. And so, that's where a guideline might be 35 to 45% is a reasonable salary. I don't think you'd have any difficulty with the IRS there.
Yeah, right. Yeah, it makes sense. So, again, it's getting in that mentality on every single closing, knowing where your money goes and what you're doing with it. I mean, that's a huge part of it too.
By the way, one of the things that we've done with you
Yeah.
and is take a relatively low salary during the year, and if you have a good year, you pay yourself a bonus at the end of the year.
Yeah,
And that, think about how a larger corporation works. That's the same way they work. And so if you don't have a big year,
Right.
then you don't pay yourself
Yeah.
that bonus, and then you're reasonable. Your salary is lower, and
Right.
honestly, you save a little more money that way.
yes. And so for you guys, that's a great point. So like I'm meeting with Paul in 2 weeks. So we pretty much know how the year has gone. I can look in, my pipeline, know what's closing or get a pretty good idea. And then we sit there and say, okay, this is what you're going to take. This is how much payroll, you're going to take. This is going to go to Fed, state, whatever the case may be.
And the other thing that we do with you at that time is how much goes into the retirement
Right.
contribution. So you're paying yourself and getting a deduction instead of paying it to the government. And that's a good time of year to do that
Yeah.
too.
Yeah, so guys, it's so important to strategize all this and to build like your tribe or team of people. Paul is an accountant, a friend, but also a mentor of type because I come to him with every major financial decision in my life. I have a rental portfolio with multiple investment properties. So he's walking you through all of that and what it looks like and whether it makes sense or, how much to put down. There's all those types of things. I mean, you need that. You need a good financial advisor, and he knows mine really well. A lawyer. These are all things that, you got to set yourself up for success by having a good tribe of people around you that are looking out for your best interests. That it's really, really important. Especially if you're going to grow and have a business and, something that you're, dialed in on. So guys, I'm going to jump into profit and loss. So let's just talk about profit and loss. I mean, I think that's one of the most important things you helped me with in the beginning. Again, I had zero. I had the shoebox. I was that guy. And it went into, starting QuickBooks, having, I just have a business credit card and a business account. It's very, very simple. So I have a TD business account and I have my Amex business card. Both of those go into QuickBooks. I reconcile it every Friday. And I go through and just say where everything needs to go. And, I break down the salaries that for me and my assistant, and we break all that down. And again, it's just such an easier way to operate your life.
Well, and the thing that it gets you is instead of guessing at the end of the year or where you're going to end up at the end of the year, you can look at it on a weekly or a monthly basis, and you can adjust your marketing spending and,
Right.
and see the effectiveness of your marketing spending and the other your administrative costs.
Right.
And that stuff, you want to keep that stuff in balance,
Right.
because what counts is how much you keep at the end of the year, not the top line.
Yeah, we had Wendy Papazon on. She's like, I don't care. Anyone can tell me what they make. She's like, I really could care less. That number is
The top line.
the top line. She goes, it means nothing. It's what you keep at the end. She goes, someone makes $1 million a year and spends $1 million. Great. They're broke, So it's like, it's really what you keep, and the profit and loss really helps you with that. And then as I was scaling my business, I was able to open my profit and loss up with other agents, right? So now you're in masterminds and you're sharing profit and losses and you're looking at stuff and trying to help each other. I mean, I was like, real estate is just a really ego-centric business where like, I'm the number one guy and I sell all this, and everyone's afraid to like open up
Yep.
and share and be vulnerable. With profit and loss or whatever. I mean, I tell Paul, and I know some of you know, I have a really good friend that's not with Keller Williams, but he had like $100 million team, 13 agents, and he was making less than $100,000 and was in massive IRS debt. It's like, well, what's the point of all that? You know, 250 plus units a year. So it really is what you keep. So guys, we'll dive into mine here. Give me a second. I'm just going to share a screen and hold on. Let's see here. That's tax registration. Give me a second. Where is it? There we go. Okay. All right, guys. So here's what it looks like. Okay, we'll start up top, and this is year to date. You know, right to today. So what I did last year, I used to have gross commission, right? Come in and it wasn't broken down. And my coach really challenged me to start breaking it up so I can know, you know, how heavy list side I am, buy side, and how this all breaks down. I also have outbound referrals and then rentals. We do a few rentals, right? So this comes to the bottom line here of all the gross commission that comes in, okay? Cost of sale right here is obviously what I pay out agent splits, and obviously splits to the company. You'll see the royalty. So all that comes as a cost of sale. And I didn't have that before, right?
No, we
so-
just put this in
so
this year.
This
Yeah.
year, you got to think like, and I was pretty good with it. And then, you know, my coach and a few other people started really challenging me, you know, to get, you know, really dialed in on, you know, again, where it breaks out, and then cost of sale. So this breaks down to your gross profit. So what you guys do is, you know, those of you who read the MREA, you know, they say 40% margin. I'm a little bit more leveraged, so I try to be between 30 and 35% margin every year. You know, that's my goal. And so you
And correct me if I'm wrong, but that gross profit, the 329, that's the cash that you actually see.
correct,
All of those amounts that are above that are paid out by the broker
correct.
to others.
Right. So you guys never see that. This is like the real, I guess, GCI and checks that you come in. So what I do is when I deposit a check, I go in and I edit it to what the gross commission
Right.
was, and then I back it out all through this. So, you know, again, my coach, we can evaluate this. I can share it with other people, and, you know, it's really impactful. So these are now just all, you know, expense all the way through. We don't have to get into them. They're all different.
But
Yeah.
I think there's a good point that you can make here, Justin, and that is, it's worth thinking about not 20 different categories of things, but you've grouped them into
Yeah.
categories that are meaningful. So the ones that are in bold, like education and dues,
Right.
how much you spend on your listings, how
Right.
much you spend on marketing. And I think that for you, that's to acquire lead generation, really is the way to think
Oh,
about it.
yeah. Yeah.
And then
Marketing
the other
expense.
kind of fixed expenses for the office and running that, then your payroll
Yep.
and professional fees, and that's it. But if you group them into those 5 or 6 bold categories and didn't worry about anything else, that would be a great start
Yeah.
from most people
Right. Right.
at a way of understanding your business better.
Yeah. They call them buckets in the MREA.
Yep.
Remember, they have the
Yep.
buckets. So that's pretty much the same thing as just having it all grouped. And again, you guys can analyze it and look at it that way. So you see, you know, now going to the bottom here, that's $193,000 in expenses. So again, for cost of sale, I'm at 25%. My expenses at 44%. So right now I'm at a 31% margin. So, you know, that's take home net, and it will, you know, from most people and the masterminds I'm in like my production level, and Paul knows this, like 15 million to 25 million in production, your take home, depending on how leveraged you are and how much you're working in your business and how much support you have, it's going to be 150 to 200,000. Like, you know, if you're running it right and you have leverage. Now, look, if you're, you know, doing it all by yourself and you don't have, you know, an assistant or buyer's agent you're paying out, you're going to be a lot more profitable. There's no question. But
And have more stress in your life. That's the trade-off.
That's the trade-off, time for money, right?
Right.
And that's what it gets, if you really want to get to it, it's okay. You have the more money, but you may not have the time. So, that's where you just
That's
make,
where you are in your life at a given point in time, but you should make that decision consciously, not have it happen to you.
yeah, exactly. I mean, some people were working 80-hour weeks, and we all know as realtors, like I remember I did 13 million in, I don't know, I forget what year it was. And I was by myself, no assistant, no leverage. I was working 100-hour weeks every single weekend, running both buyers and, sellers. And I remember almost wanting to get out of the business because I was just so burned out. I don't care. It was more money than I ever made, but I'm like, this isn't worth it. So again, you look at, and again, Wendy Papasan yesterday, she's like, you look at this as an asset in a business. Now, some people, this is one of their businesses, and they have 5, 6, 7 other businesses, and they know what this, runs at, and that's what they need. So this is just what the profit and loss looks like. And then the great thing is that I've been doing it like this so we can compare it to other years.
Right.
You can look at it on your multi-year trends on the KW site to see, what months obviously you're bringing in, the best numbers. And it's really cool from a tracking perspective. It just gives you a lot more confidence in your business and what's going on, especially year after year. So any other comments on this, Paul, before we get out of here?
No, I think those are the highlights. Probably one comment. Justin uses QuickBooks, and the advantage that gives them is that ability to compare it to prior years, to compare the first quarter to the second quarter, all that stuff, and you use that.
Yep. And
if you don't want to use QuickBooks,
right,
set up an Excel sheet and keep those same 5 to 10 categories and just capture your expenses every month, because the danger is you forget something.
Right.
And you can still do as, even if you don't use QuickBooks, you could do this in another way, and it would help you organize.
Yeah, like I was just in Tom Kennedy's office yesterday, and we share profit and losses with each other, and he does it on a Excel spreadsheet, and he has it. It's cool because he has it set up from I think it's 18, 19, and 20, like right in the column, and you can see it. You can see his progression and how much he's grown and scaled his business, and it's all in there, cost of sale. And so the other thing with QuickBooks that I like, he can jump in and do stuff and look at it and change some sections. If, I want something changed, it's literally a 2-second call, or, when we meet and sort of go over things.
And one of the things that we do is set QuickBooks up for real estate agents. We've actually got a couple that are in process now that have been kind of nudged along by their coaches, and we can set it up in a way, and you can download the transactions from your bank account. You can download them from your credit card. And then it's just a question of putting them in categories that make sense to you. Yeah,
it's just a really good habit to get in. And again, even if you're not there at the 50K mark, it's really a goal to start looking at, to say, okay, when I get there, this is how you do it. And so Paul and his company, they handle it all. So another thing that, even if you guys do have an LLC, I didn't know this when I was at Remax previously, is that it has to be approved with the state, right? Your LLC. So it can't have Justin Gall.
Has to be approved by the real estate
commission. The real estate commission, I'm sorry. So a lot of people have an LLC, but it's not set up, and you could get in trouble, obviously, if you got big
brokers shouldn't be paying commissions into it.
Right. So that's something.
And we've had brokers send us people that they were paying commissions, and they decided, why should they take the risk with their license? And they were stopping.
So what is the process? Let's talk about that a little. And I forget what the fee is and stuff, but I mean, so basically it's because so many agents have them around that every time I see them, I laugh at them because it's your initials.
That's how we recommend it.
Right, everyone does it with their initials, QA LLC. And then how long does it take and stuff, just in case?
Probably. So now, if you're at that commission level, now is an excellent time to set one up for 2021.
Yep.
Because probably about 4 weeks between forming the entity with the Department of State, then going to the IRS and getting an employer identification number, and then going back to the real estate commission and at the state and getting it approved to get
Right.
your commissions paid into it. So a couple of things about that. You attach your license to this, and the license is at one broker.
Right.
So if you want to do this with a spouse and you're at two different offices, you can't do it that way.
Right.
If you're at a spouse at the same broker, you can do it. We don't recommend that a team does it all together.
Right.
That it should be each individual, because the different people on the team may want to go their own ways at some point, and you're forming a legal entity that makes it difficult to do
Right.
that. So we do the whole process sort of start to finish.
Yep.
For a little over $1,500.
Yeah.
That includes the fees to the state to get everything done and get it set up. And again, it takes about 3 or 4 weeks, but if you were to do it now, do it effective January 1. That's
Yeah,
the
don't-
place to-
Don't ever start in the middle of the year.
Right. No, you're spending money on something that depending on, we have had people do it in the
Right.
middle of the year where they're going to get commissions in and they're going to have savings that justify it for that.
Right.
But if you're here in November, you're
Yeah,
probably
it's
not
usually
going to
a
have
good
that
time.
many closings to justify the extra cost,
Right.
put everything in place.
Yeah, Matt had a great question. So if you have an LLC, how would you get it approved? But if, your person didn't do it or you just opened one up, I forget.
So there's some restrictions on it. You're supposed to do it within 90 days of forming the LLC.
Oh.
And so what we've done for agents in a couple of different offices, including here, is change the name slightly so that it looks like a new entity to the real estate commission, and then go to the real estate commission. And just like everything else, there's a form to fill out.
And a fee.
Yeah, and a fee, and you submit it to the real estate commission.
Okay, so that,
A couple of other restrictions: can't have your name in it,
right,
can't have the words real estate.
right.
It never goes on your business card. It's between you and your broker for those commissions.
Yeah. Yeah, and it's something you don't think about. And I had mine for years in the past. I went to an attorney, 12 years ago and set mine up, and he had no clue of
No,
Because
attorneys don't know
the real
because they
estate
don't
commission.
deal in this world.
I forget what mine was even called, but I think my name was in it or something.
Yeah.
But so yeah, it protects, them, and then it protects the brokerage who's writing
Right.
checks out to that company. Dave said his was approved by him. Can the LLC be used in more than one state? Oh, good so yeah, because
What really
so-
matters, like in New Jersey,
right
you're not allowed, the broker can't pay commissions
to
to an LLC. But if the broker is in Pennsylvania
right.
and it's attached to Pennsylvania, you can do that.
Yeah.
You can do it with Jersey transactions.
yeah. So fortunately, obviously, we don't have to worry about that because we're licensed in both.
Right.
As a
Right.
broker too. So it gets paid in. Yeah, I mean, that's obviously, yeah, so it's really important. So you guys, you see the legality behind all of this, and obviously just aligning yourself with people who are going to set it up and, do the right thing and make sure, you're protected, that the brokerage, is protected as well. I know Bev asked for a spreadsheet geared towards realtors so they can see the categories. Yeah, if they just want to use Excel. Yeah, Bev, I don't have one. Good.
I've got, we have a business organizer. That's a
Oh, that's right.
one-page thing. That's more of a kind of a checklist. You won't have every item on it, but it'll help you think about how to group your business expenses. And I'd be happy to send that.
Yeah, I can
just
get-
shoot me a note.
Yeah.
And I'm happy to send that out to anybody.
Yeah, I'll get that, and we can send that over. That's no problem. And again, getting, even if it's not QuickBooks and it's just an Excel spreadsheet, it's so important to be able to look at that and the health of your business. Make sure you're not overspending on your expenses. And like Paul sees these all the time. I mean, some people's expenses are out of control with what they're spending. They have no clue. I mean, whether it's Zillow or they're doing, old school mailers, and they don't have a pulse on their business, and they're just throwing money out the window, spending, spending, spending. And, I mean, you see
See a
people.
lot. Yeah. And it's surprising. And on the other hand, there are people with a lot of commissions that
Right.
don't spend that much.
Yeah.
And you see a big difference in profitability.
So, yeah, I mean, and that's a great point right there. So, if you're spending money on leads, right, on internet leads and doing all that, there's a cost to that. If you're running your business mostly through your sphere, you're going to be a lot more profitable.
Right. That
Here-
doesn't mean you shouldn't do those things,
Right.
but go in with your eyes open and look at the return on investment
Yeah.
from doing those tactics.
And in talking with a lot of agents and recruits that aren't with Keller Williams, what I've realized pretty much the number is, and you can tell me if you think these numbers are accurate too, but 75% of their business comes from sphere or referral. And then 25% comes from whatever,
Yeah, I don't always get to that level of
Yeah,
detail with it.
Yeah, of leads and buy-in. So then you look at too, if that's the cheapest way, the 75%, that's your referral base, and that's the most profitable. A lot of people are spending big number on the 25% of their business. It doesn't make sense why they're spending all that money on something that's going to yield you 25% of your business. Why wouldn't you just put that all into your 75% of, your referral and your sphere? And again, you're much more profitable that way. Again, without tracking, you have no clue.
Right.
You have no clue. So it's really just getting into those good habits and again, opening up. And I mean, Paul doesn't give me names, but he tells me that someone came through today and they're behind 3-4 years in taxes. It's just it's such a scary place to be in. I mean, I was there, so I know. Or they have no clue what they're going to pay every single year. So by doing these things and creating really good habits, you end up setting yourself up for success and trying to
Completely agree.
figure it out piece by piece. And again, Paul sees it on a daily basis, but like that stress of people coming into your office, I mean, you're like a savior half the time, right? And
First have to calm them down.
yeah, people think they're going to jail. They don't know really what's happening until you get in there. So again, like be vulnerable and be open to this stuff. I mean, I even go back to when I bought my house years ago. I didn't even use my preferred lender, who was one of my good buddies,
Yeah.
because I was so concerned of him seeing, my money and my assets. And now, like, again, I'll share my profit and loss with people. I'm in other masterminds where we share our net worth statements. I mean, it's that's where you want to be. The more you open up and start sharing, the more beneficial it's going to be for you. What do you got?
I've got some things that just tax strategies.
Yeah.
And things that are, I'll call them common misperceptions.
Okay.
I mean, you've been alluding to people that haven't filed a return or late. Even if you can't pay, file a return. You can do a payment plan. It's better to, the entity, believe it or not, that you want to owe is the IRS. It's not Philadelphia, and it's not Pennsylvania. The charges for being late are higher for both of them. And so you want to pay them off first. And then if you have to do a payment plan, do it with the IRS. But file your return.
Right.
Because there's separate penalties for not filing.
Right.
And
Right.
you never want to be there.
Right.
Rental properties. A lot of our clients have rental properties because they understand real estate. They understand real estate investing. I always recommend, and I'll put flips in this too.
Yep.
A lot of people make good money on these things, but go in with your eyes open and also understand the tax implications of those things.
Yeah, I mean, and I've done that with you, Paul, like, again, on stuff that I've owned or am looking to buy, what does this look like from a tax perspective? And again, it's really important to have those people on your side, understanding that. And real estate guys, I mean, I think I saw something that it's like our industry, 80% of agents that were all selling real estate, don't own anything, may not own anything their primary, but definitely don't own a rental property. 80% of our, and remember we're the first people to get eyes on it, so you can walk in somewhere and you're at a listing appointment, or, something comes through your sphere, and, you want to be available to buy that if the opportunity presents itself. It's something really important. And, this is going a little bit off, but it's still wealth building. And if you guys don't have all these things that we're talking about, and you don't have everything lined up and all your ducks in a row, you're going to miss. I mean, I look back, I missed out on I made so many people millionaires. And
Well, the other thing is you can run losses and deduct them and use them to offset your other income because you're a real estate professional.
right,
I can't do that.
right.
But real estate agents have the ability to take advantage of some things that
Absolutely.
other people can't.
Yeah, no, it's true. I mean, and again, going back to I looked back, and I have clients now that still have something I sold to them 10 years ago. It's paid off. They're making money. I was like, I could have done that same thing.
Right.
They weren't any smarter than me, or money wise. They got a mortgage on it, whatever it was. And so just, again, these are all long-term sort of goals and investments, but you got to have your finances set up, and you got to have it organized to be able to even attempt, an opportunity, and again, to grow wealth and to leverage your life. So
kind of on topic of spending money,
yeah,
never spend money just to get a tax deduction.
right.
You're paying a lot in taxes, and the number here was 33%, but your net cost of taxes is somewhere between 25 and 33%. That means that you're paying between 75% and 67%.
Right.
Your out of pocket you may think you're getting a deduction, you're not getting a credit.
Right.
And that's an important thing. You still should be judicious with how you spend the money for.
It's still your money.
It's
I mean,
still your
how many
money.
times do you hear, oh, it's a write-off? Like people
Right.
go, oh, I don't care, it's a write-off. It's like,
But that write-off, you're paying 3/4 of it, and the government's picking up 1/4 of it. And
Right.
Just go in with your eyes open.
yeah,
The other thing is, if you're going to hire an assistant, make sure they know up front that you're going to issue a 1099. Nothing's worse than at the end of the year, you say that you're going to issue a 1099 and they're going to get taxed on it, and then they're surprised.
that's a great
And
piece of advice.
you get their social security number up front and set expectations. It's a much healthier way to start that.
That's if you're not
relationship.
salary, if they're not
Or
salary.
put them on salary, right?
Right.
If that's appropriate.
So guys, that happened too with me, even with an ISA. You say an assistant, but an ISA, same thing, it was 1099 him, and then he's like, oh, this is great. He was a young kid. And then I just randomly in the middle of the year, I was like, you saving for taxes? He was like, what do you mean? He didn't know. He's 24 years old. So you really have to set that up front. That's a great piece of advice for anyone working.
Yeah, any business owner, but especially real estate agents.
Yeah.
I see a lot that they've not issued the 1099, and then they can't take the deduction
Yep.
for the amount of money that they paid, and they're like, okay, that's
Yeah. Now you're saying that. Years ago, when I was with Remax, me and another agent were splitting an assistant. So 20 hours each. And she freaked out at us, the following year. She got issued 1099 and had zero taxes saved. It ended up being, an issue. So
another one that we have people come to us is said that rumor that the home office deduction is a red flag. It's
Right.
not a red flag. You're entitled to, if your office and you run your business from your home, then you're entitled to allocate a portion of the cost for that home, and it's absolutely legitimate, and you should be taking that.
they say it's a red flag for auditing person.
Yeah.
They're like, yeah. So that's just a rumor in the rumor mill with
I don't think we've ever had anybody audited for home office deduction.
right. I mean, so on that point though, what are some major red flags? I know you talk. So the reason I'll answer my question for you, and then you can add. But I remember you saying having a payroll company, having
Right.
an accountant, like all these things lessen your chance of an audit, right? And it's not you doing it, and you don't have a payroll company. And again, I guess they look at that as like, okay, it's,
In a sense, one of the biggest red flags for real estate agents is dramatic changes in their income.
okay,
So you have a lot of income one year and then stuff happens in your life and,
Right.
and you have a lot less. That's more likely to look like you're avoiding
some type of,
paying taxes.
some types of
Yeah,
tax on it.
yeah. And you've got to show some profit. And
I know.
like if you're not profitable for years, then that's going to be a red flag. We see that less with real estate agents, but more with people start other businesses.
Oh, and that's a
that
great,
soak a lot of money into a business.
well, and that's a great point too. People don't realize the disservice of like, they have $1 million that come in and they back it all the way down to nothing or $50,000. And they're,
Right.
not hiding money, but finagling some money. But then it's a disservice when you go to try to buy a house,
Right.
or when you try to buy an investment property. It's just not, people think they're getting away with it, and then they have no leverage to buy or do anything, or even in their own business, get like a business line of credit, or, something, whatever,
Yeah.
whatever it takes. So yeah, what other, anything else? So it's basically, I mean, as far as red flags, it's just huge income shifts.
Yeah,
That's
probably
a
the
big
biggest
one.
one that I would see where we've had people audited. If you get a letter from Pennsylvania or the IRS, respond to it. Don't wait. Nothing good comes from waiting. And I'm responding to one today where a client forgot to give us a tax document.
Right.
And the amount the IRS assessed is probably double what they really need to pay.
Right.
But they're going to need to pay something.
Right.
But if we waited 3 months to do it, he would owe more.
Yeah.
And so, and it doesn't mean they're right. We deal with a lot where the IRS is wrong, and you just need to provide clarifying information, but do respond.
And they'll never call you, right?
They will never call you.
Everyone hear that? The IRS will never call you. So if you get a call from the IRS, don't.
It's
don't
somebody
send them
in
anything.
India or Malaysia or something. Yeah.
Right. Yeah. So I mean, and the state too, right? No one will
No,
ever
they
call
won't
you.
call you.
I mean,
Yeah.
it's a good point.
Yeah.
So a few more questions here. When hiring a stager, photographer, or cleaning company to prepare your listings for marketing, do we have to issue them a 1099? No, right?
It depends
Oh,
on
how
them.
much?
It depends on two things.
Right.
One, how much you're going to pay them. If you pay them over at $600, it's possible, but it also depends on what kind of an entity they are.
Correct.
So if they are an S corp,
Right.
like if you've got your LLC, then you don't have to issue that. If they're a partnership or proprietorship, then you are supposed to if they're over $600.
Over $600. Yeah.
But the way to find that out is to have them give you a W-9 form,
yeah.
because that tells you what type of legal entity they are, and it gives you their either EIN or their social security.
Yeah. And that's a great question. And you also think at the end of the year what a pain that is. If you have a bunch of vendors,
Oh, yeah.
oh my God, you forget about it. And then all of a sudden Paul's like, hey, here's all the vendors that you paid over $600. And if you weren't paying it to a corporation, then you got to go get their
Right.
social security, right? And their address, and then issue them the
So
10.
for example, we've got a client that does contracting in Philadelphia, and it probably did $2 million of income, and probably $1.6 million of it was to subcontractors. Well, they had all their W-9s, and none of them needed a 1099,
Right.
but they knew.
Yeah. Yeah. The key is knowing, and then obviously letting that vendor know too. If it's a vendor that's not running a big business, or they're doing it on the
They should-
side,
right.
a side hustle, they are going to be surprised and maybe a little pissed off if you get.
And there is a box to check on your return. Were you required to file any 1099s? And
Right.
did you file those 1099s?
Right.
And so you have represented to the IRS that you've done it.
Right.
Or,
Yeah.
yeah, and so you have to do that.
And if you do have clients that do get audited, you guys handle that right with them and work
Yeah.
with the IRS.
Yes.
I mean, and I mean, that's that's a main reason for having an accountant right there. God forbid, like, what are you going to have the guy sitting in your living room?
Yeah.
I've had clients had that
Well, you don't
happen.
want to do that by yourself.
Yeah, you're sitting there, you got an IRS agent in there asking all these
Yeah.
questions, and you know you didn't do anything right. So, just another question. We've got a few more minutes. If you already have an LLC, can you do a name change and continue to use it? So, yeah, right,
Yes, yes, we've done that.
and they, you handle that.
There's a
Um,
couple steps to that, but
Yeah. Yeah, so no, again, guys, this is just, again, setting up and creating really good habits, setting yourself up for success in the future. And the sooner you do this in your life, the more control you can have of your finances and, bring your stress levels down. Again, when I have my meeting with Paul in 2 weeks, we'll go through it. It'll be done. It'll be all hammered out. I'll have all my taxes in. It's such a great feeling from where I came from 10 plus years ago, sitting like shaking or just totally trying to push it away and waiting, for that bomb to drop, as I said. So it's just getting in really, really, good habits. And the sooner you can do that, the better you're going to make your life, the more opportunity you have, the more wealth you're going to grow. And that's something that, we really champion here, is helping people understand that at a high level, because, selling real estate, you have such a great opportunity. I mean, let's go back to the margins real quick. When I share, I'm in a mastermind, I'm the only realtor there, and there's all bunch of other industries. They can't believe the margins. I mean, you have other people,
Yeah.
other
oh
industries.
yeah,
Real estate sales
it's a
margin
great-
is
great
insane
margin.
if you run it right. That's the whole key. If you don't, you're going to be at a really low margin and it's not going to be great. But like, for instance, like before Whole Foods was bought out by Amazon, they were at a 3% margin. Now look, they sell billions of dollars.
That's the grocery business.
That's the grocery business, right? But it goes to show, what an opportunity you have in selling real estate, and then obviously owning and, buying real estate for your investment portfolio. And look, it's what we know. So again, setting yourself up with all this stuff is a key to it. Do you have anything else in closing?
I guess just if you need advice, ask ahead of time. Seek out a professional, just the way you would recommend someone selling a house to talk to a real estate agent. We've had some people come in the last couple of years that have made moves with IRAs and changing title on properties and cost themselves tens of thousands of dollars.
Yeah.
And so when you're doing something, better to ask ahead of time
Right.
than to ask after the fact.
Yeah, we get that one with, I had a client, an older client, who was going to change all of his properties into the kids' names.
Yeah.
But now the government looks back 5 years. It used to
Yep.
be a 3-year
Right.
look back, and now it's 5 years, and they had no clue. I think he died within that time, and then they got hammered.
Oh, we had a client that was declining in health, and he had retitled the property to his daughter.
Yeah.
And then she sold it to pay for his long-term care. And she wasn't exempt from the gain. And it was in South Philly, and they'd owned the property.
Right.
It was like $500,000 a gain.
Yeah.
And it cost them about $30,000 of
Yeah.
extra taxes. So if they had had the conversation ahead of time, they'd left it in his name.
Yep.
It would have made a whole lot of sense. So
Yeah. It's
it's
about,
unfortunate when you see it. Same thing, especially with IRA money. People taking IRA money out to do something. And met with a person who's prospectively investing in real estate, and their money is all tied up in
in their
qualified accounts.
right.
And so
Yeah.
it's going to be harder for them to make it work.
Yeah, no, I hear you. So guys, two quick books just in recap here. Obviously the MREA, I've listened or read that book sort of eight times now, and that gets you into like the mindset of how to run a business. Even if you're small, doing a few deals a year, you at least know, where you're going, and you have a path to that. The Compound Effect by Darren Hardy, again, talks about, compounding, not just money, but your daily habits. So this whole thing, guys, is about creating good habits. Again, you've heard me say it 100 times now, that set you up for success. So Paul will get everything over to me. I will send an email out to everyone that was on here. And I'll also include Paul's information if you guys have questions or, eventually thinking about opening an LLC and setting that up. So, yeah, we're right at 12 o'clock. I want to respect everyone's time. So thank you guys very much. And I'll talk to you guys soon. Thanks, guys.